Trump has dumped his US tariffs on his major trading partners, China, Mexico, Canada, and the markets have reacted accordingly.
We're going to win so much, you may even get tired of winning, and you'll say, please, please, it's too much winning.
Bitcoin down 7% today. The US markets also taking a pretty solid hit. And in opening hours of the new trading session, they've also been down. That's the S&P 500. The NASDAQ down 4% on the new trading day. And the Dow Jones also down as well, with the NASDAQ and the S&P 500 putting in new fresh lows through this period. However, there might be a little icing on the cake here because we haven't finished the day's trading. So what we need to look out for are the day's closes, where those prices sit, where the closing price sits, and the volume. I want to explain all of that in today's video, along with some long-term data on market sentiment for the S&P 500. Plenty coming up for you guys today. So hit the like button, subscribe to the channel. This is your home of macro cycle analysis. Let's get straight into it with the news of Trump dumping his tariffs on the market. For example, the US has now put on a 10% reciprocal tariff on Australia. So if you want to buy that prime quality Australian beef, it is now going to cost you 10% more in the US. And we all know the Australian beef is the best in the world. So hopefully one day Trump comes out, removes the IRS, and you guys only have the external revenue that you are accumulating over there in the US. Now, on to some of the data that we're looking at here. One of the worst 50 days for a new president. Let's start off with some of the worst stuff, get into the better stuff, and this is just according to the data that is already out. So it's essentially facts. Now, the difference that comes from looking at the data and the numbers is how you choose to interpret them. This here is looking at the first 50 days of a presidency. And in summary, this has been one of the worst 50 days for the stock markets. Now, things can obviously turn around, and I'll show you some of that data in just a sec with what this might look like over the course of the next 9 or so months as we finish out 2025. But Trump is now on record as being the third worst here, along with other Republicans, Nixon, Bush, and here he is, Trump down the bottom. So the max gain so far was only 2.5% in this first 50 days, with the max loss being 7.9%. So a poor reaction in the first 50 days can be a bad omen, basically expressing that the rest of the year could be down. However, I've got something to show you that this doesn't take into account in just a moment. But like you can see here, you've got the first 50 days had been bad, and then you can also see some of the instances where they weren't so bad. We saw a climb out of some pretty bad first 50 days. S&P up to the worst 50-day returns following a presidential inauguration. Here you can see the signals on the S&P 500. We still had some higher times, just like this chart here shows above, but of course the odds are now stacked against the rest of the year being positive. So here is the massive one that could suggest the rest of the year isn't going to be as bad as at least what this data here is suggesting. So let's flip it now. Now, if you're a TIA premium member, you understand how these charts work, why they're important, and how you can use them in your own trading and investing. If you do want to learn more about it, there is a link in the video description. But for now, we're looking at two lines here. The blue being the actual line, this is for the Dow Jones, and the orange line in the background. Now, when we take into account specific cyclical years, according to where we sit in the real estate cycle, the first half of the year can be quite difficult, but the second half of the year may become a little clearer. And that's essentially what I've been sharing with you throughout 2025 as we've been now diving into March, as you can see on the orange line. And then the next couple of months might be a little bit still indecisive, not breaking to new highs, but might not be putting in major lows either. We probably have a bit of a trading range to go through here, and the reasons will become clearer as the market progresses. But the big thing I want to look at here is a possibility of a drop into June, at which point I think a lot of people would come back to the idea of a recession is very much in play and things are looking even worse than what people had first thought at the beginning of the year. But of course, that's about 3 months away. A lot of work to do until we get there. I just want to keep reminding ourselves of the cycle within 2025. Now, if you want more of that, there is a link in the video description for TIA Premium, heaps of courses on how to build your own trading and investing plans, especially through the uncertain times like we see now, and then into any sort of peak and correction. And finally, while I'm talking about the Investor Accelerator, we have a trade alert going out today, a fresh trade alert email. If you're not on board already, just use the link in the top of the video description and you'll get that to your inboxes in roughly 8 hours time. Okay, let's carry on with some more of the data here for the S&P 500. Now, this is the performance since 1950 when quarter one is down. So we saw a red quarter already. Of course, people can say, oh, it was Trump's tariffs, it was this, it was that. That's not the point. We just want to look at the data and remove the opinions of people like myself. So just focusing purely on the data here. So if quarter one is down from 1950, that's how far back this goes, there are a number of those quarter ones being down. The total number, about 27 years. April is about 17 times up, 10 times down. So there is a bit of a positive here for April. But what about a little further out? Well, we've got quarter two. So if we've got April slightly positive here, you got 17 out of 27 times. In quarter two, it's basically a coin flip. So this is where things get a little bit tricky. And I think the cyclical pattern here could play out based on what we're seeing with a lot of the data and the cycles coming through. So that's quarter two, basically a coin toss. But then you get to quarter three, right here, quarter four, and that's where things become a little bit more sided to the bulls. And depending on how much the market has dropped over April or quarter two or even into quarter three will depend on whether that year end is going to be positive. And so if we take a look at the full year, in some of these cases, it can be negative 3.8% and the median is 6%. It's been up 11 times and down 16 times. Market sentiment reports show throughout history, there have been pretty reasonable areas of lows. We saw that in 2022 as one of the most recent examples. This is the 5-week moving average of the AAII, and I'll have the update for you in the next video. It's not out just yet, but we'll be able to see that probably Friday or next week. The AAII, so the investor survey here. So this is bearish sentiment. Sentiment worse than COVID-19 and the GFC. So this is the sentiment at the moment with these tariffs. The way I look at this is it's nice to see very negative sentiment just coming off these highs, because it almost seems like the market isn't ready for further upside. They're all trying to factor in that there's going to be more and more downside. So that's just looking at the charts here when it comes to the survey. You can see these areas of very high bearish sentiment come after the peaks. And a long way after the peaks, you start to get even higher readings of that. Same sort of deal at some of these other lows. Just like you can see back in 1989, 1990, when there was a recession, there was an extreme bearish sentiment. So I'll come back to this when we got the update of the AAII investor sentiment survey. Now, blocking out the sun so I could see the next tabs, we've got S&P 500 total return index consumer expectations. So similar to the last data that I showed, Conference Board consumer expectations index, a lot of words here. Essentially, the sentiment is down, and historically, it hasn't been a great time to be exiting an entire portfolio. That's just looking at the data itself. And from these low readings, you generally see, as in the case of the blue line, the market goes up from that. Very low reading here. That was in the June period, 2022, around when recession was at one of its highest volume search volume through Google. And then of course the market bottomed out and rose, a lot, 100% or more. The low was around 3,500 points. And of course we're sitting somewhere around 5,500 with a peak at 6,000. So yeah, not quite the 100%, somewhere around the 80%. But these levels, when they come up on the sentiment, as the history has shown, pretty good times to be looking for a position in the market, even if the market goes lower, like it did in October. It went lower than January. This is through 2022. But if you've got the patience, then the game is your friend. So taking a look at that on the chart, we've got the S&P 500. Now, another signal here where the market hasn't rallied on when this signal has shown is, of course, the 3-day rule, or in this case, the 3-day or the 3-bar and the 3-week, which is why I'm calling it the 3-bar rule. It's on a daily chart, and then a larger signal on the weekly chart. So you can see the circles here at the top off a significant turning point. That was an all-time high. I'm not trying to use it any other time throughout the trading ranges and the price action. It's got to be significant turning points. This one here was an all-time high. This one here was an all-time high. This was an all-time high. That's a significant turning point. And you can see these last two times where it came in, it slowed the market. It really did not go up from that point. And you can see the price is obviously down from that first signal on the all-time high, above 5,800 points. So here we are today. We also have a 3-bar down there, 3 weeks. And on the daily, we're taking a look. We just printed a fresh low at 5,481 points, coming back at the moment to test in this zone. So 5,400, and we're just a little above that now. Now, of course, if this one breaks down, still more support to the downside. We've talked about it before, 5,100, 5,200. And in terms of a percentage from the all-time high, it's still well within reason. Currently, 11%. To these lows, 12.5%, and to the August low, about 16%. So it does happen in markets, and it's still above the 50%, still above major key structural levels. And until those break down, it's all part of a correction in a broader trend. And as we've discussed with the US stock market cycles, the first half of this year could be that area that is very uncertain until things become clear later in the year. And you can start to see how that is playing out with the news itself. Anything to the downside above the support levels is still okay. Breakouts above the 50% levels is what this market needs. And this 50% has now moved to 5,823, so closes above that 5,800 points. As I said, for the NASDAQ, also down and printing fresh lows here. Got to get back above the highs of 20,500 points. If this is the current low, throw another 50% from the low to the tops here, around 20,500, and the entire range 20,600, which, if we're still looking at the previous level, 20,800 for the NASDAQ, is really going to set you up for a stronger position for this market. But until then, well, you've got the downside and the support levels to watch. The Dow Jones slightly stronger here than the S&P and the NASDAQ because it did not put in a fresh low. The 13th of March is still holding up. And as I said in the intro, the big one to watch here for the stock markets are the close and the volume today. So at the moment, just fresh data. It's only a few hours old, another 20 hours to go. And if this does get a stronger close, probably equal to or increasing volume would be great to see here. Then that could be another area that the market finds as part of the trading range, as opposed to the extreme fear that we've seen from the Trump tariffs. And we've definitely got that extreme fear flowing out into cryptocurrencies. Extreme fear today at 25. The market, as I said in the intro or the headline, we've never seen Bitcoin rally on these types of signals. It still needs time, and unfortunately, part of that time for many people is the patience that they all lose hope with and sell out. So if you are one of those people, try to stick around in the market, even if you have to sell out. That's just my opinion. Let me know in the comment section what you're feeling like you need to do in these times. So 7% down after the rejection at around 88,500, basically again at that $89,000 level. Previous swing bottom here, previous swing tops, big rally into the news, big dump around the news, and here we find ourselves at another low close back where we were about 2 or 3 days ago. So we can split and dissect this any which way, but really the market is not going to rally until we see a culmination of the signals we've talked about when it comes to the stock markets and a reset of the market sentiment. Time frames here, you guys that have been following, get it. Hit the like, subscribe so that you're following along. 5 months. I mean, it's crazy to think at the time. You've got the peaks there in November. We had signals on the 17th, or a few days after the 17th, which is the same signal I just showed you on the S&P. 1, 2, 3 days down. Yes, including the green day, which was a lower high, lower low from a significant turning point. Basically stopped the market. You had $1,000 higher at the peak, so short of 1% higher, lower close, and then the rest of this has followed. At the time, December, January, it was almost seeming impossible that Bitcoin could drop 30%. But there were signs there that we talked about on the channel and with our members and how you implement that into a trading plan, that this was likely a time that the market was going to slow. Now, there are a few other times through the early part of February where there was a chance that we were going to get a rally, but then it got met again with rejection here on the downtrend, and then the breakdowns of the swing lows, the breakdowns with increased volume, and obviously the rest is history from that point. So now we basically find ourselves in a trading range. And as for Bitcoin on the short term, it did get to the 85, which was on Tuesday, but then slammed back down underneath the diagonal, underneath the resistance levels at 89, and of course that previous swing low back here, which is super, super important, the 13th of January. And so at the moment, one, it's in a trading range. There really aren't any other signs to this until we get a breakout above 86 and the diagonal, so 86,000, which is a 50% level here of this range. That's the current low, the 30% drop. And then the Bitcoin Strategic Reserve tweet, which was basically a sell the news event. The market sold off again. That's the level through the middle, 86. And if it was today or tomorrow, it's pretty much going to get you above the diagonal downtrend as well, which has essentially held the market down since the inauguration top. So it's January 20. So we're now coming up to 2 weeks short of 3 months underneath this diagonal downtrend. So that's really where things are happening. Okay, so Bitcoin, as I said, hasn't rallied while it's still been in this accumulation phase of market sentiment. And in between these levels of the trading ranges between 89 now and 76, essentially we could see a little more noise here. Now the invalidations we've talked about several times, but just to give you a quick update, roughly around below these highs. So $72,000 to $74,000, the previous highs, and at a final straw, 62K. That's the current 50% level. But for now, it's still in the trading range, so we won't get too far ahead of ourselves. And we'll continue on with more charts here of other areas where Bitcoin has never rallied from, in this case, USDT dominance. Now, it's been a few days since I've popped this one up. We got the rejection off the diagonal downtrend, but just yesterday, we got another close above it. This has happened before, like on the 10th of March. So the diagonal here takes us back to the previous higher low in September 2023. That was Bitcoin's higher low, but a lower high here for the dominance, connected to this important level as well. So that's the August low. Remember when Bitcoin dumped down to 49K for the day. And now we're back up at that level, trying to put some pressure on it for the USDT dominance to break through it. So at the moment, it still has not broken down from here. One of the positives the bulls have at this point is that some of the volume running into this top is lower than the previous volume breaking out. It has increased, like you can see here, from the last couple of weeks. That's not a good sign, but it is still lower than these areas. So it really needs for the bulls to fail here and come back under this level, and any more attempts need to be met with lower volume, like you can see with the rest of these moves to the upside. Lower volume attempts at the resistance level, which are generally met with a rejection. But if you start to see the volume increase like here, like that area, probably going to see further upside. And that is the uptrend for the USDT dominance, but not so good for the uptrend for Bitcoin and cryptos. Speaking of cryptos, the total crypto market cap, excluding top 10, so here is the dominance. We have just seen a new low here and a new lowest close. So the new low takes us all the way back to the 3rd of February. So that's the lowest point we've seen since then, 2 months. But this is the lowest close. You have to go all the way back past 2023 to get an even lower close than that point. I think we've got to go all the way back into 2021. So this isn't looking good for altcoins, especially as this market continues to drop on each of these announcements and basically getting lower than BTC. It's putting in fresh lows, breaking swing bottoms, and closing lower. So essentially that is just suggesting there is going to be further downside. ETH has continued the same thing here, even though it's not part of the others, being that it's excluding the top 10. We'll have a look at ETH and XRP. Every time ETH rallies, it keeps getting met with lower highs over the broad sense here and the volume keeps increasing as ETH gets knocked down. So we still have not seen a reversal here for ETH, and the numbers I'm watching for ETH are still, crazily enough, let's talk about 15 and 1600 first, and then the 150% extension of the monthly double top. So despite all of the influences that I'm hearing, at least on X, you might also hear them yourself as well, I think they are a massive fade at this point because it just hasn't gone anywhere. And through this whole period, even from when, was it Eric Trump posted about it on X, saying ETH was a great buy the dip opportunity. It's somewhere around, I don't know, $3,000 or $2,900. This thing is absolutely dumped. And from the technicals, that goes back to the top here, March 2024, and the next top in December 2024. Double top extension, the target prices have been met on the way down, 50%, 100%. Next targets are around $1,100 and $1,200. Before that, forming a very minor base here at 1760, and then down to around $1,500 to $1,600. That's pretty much the only area that you've got left for support for ETH until it can come back and test the March low and then back to these lows here. So basically every couple of $100 on the way down now. There's only, that's the hope left for some Ethereum support. As for XRP, it hasn't broken any of those previous lows, but it is tied equal low close with the 10th of March. 10th of March, $2.02, and yesterday, $2.02. Now, if you want to get even granular than that, look, there's a 0.2 difference in it, but let's call it for what it is. $2.02 equal close back with the 10th of March as well. So while the downtrends persist for XRP, for cryptos, for ETH, we've still got to look towards those next targets. As for XRP, around $1.80, and then I've still got my target here of around $1.40 while the downtrend persists and the lows keep getting broken. You see a turnaround, then we've got to reassess and look for some strength to the upside. Now, there's one more report that I love to look at when it comes to Bitcoin never rallying unless this one is met. I'll save that for a future video and just focus on where we currently sit. And we've got enough information now with the market sentiment, the price action, the trading ranges, and totally understand that this period can be one of the most frustrating in the game. You can see back from the 11th of March, that the price has basically gone nowhere, still sitting at $83,000. But if you've got patience, you've got yourself a plan, knowing when those signals are to get in, when those signals are to get out, just in case things turn, then you've got a much better strategy than 90+% of people. So stick with it. If you need some more information, there is the trade alert going out today looking at BTC on the long-term basis, and also the crypto and economic report that you would have received a couple of days ago. So stay tuned to that. I'll have the updated report coming through to you guys as well. Like, subscribe, and I'll see you guys back here at the next one. Till then, take care. Peace out.